Starting things up on Zoom and YouTube. Off we go. Off we go. Good morning, everybody. Back to the daily profit plan. Let's get the slides up here. All right, daily profit plan. Thursday, post Fed. Markets are down. Gold is down. Silver's down. Oil's down. Dollar's up. Risk off trading. We're going to hit that 200-day moving average. We're going to gap lower today. How's everybody doing out there? Screen shares up. Let me get Zoom going as well. Chat is up in YouTube. We are streaming on youtube.com/Chris Pulver, youtube.com/Financial Wars. We're streaming on Twitter or X, on LinkedIn, on Facebook. So come one, come all. Tune in. What's happening? Happy Thursday. Okay. Zoom link worked today. I see. All right. Stephanie, hello. Pete, what's happening? Gil in the house. David is here. Dave, good morning. Greg, good morning. Carrying that bear spray everywhere. Yeah, well, I don't think you're going to ward off the bears right now. Just keep it on you. Yeah, we might have a really good like market breadth opportunity in the next maybe 15 to 30 days. Geopolitical stuff keeps escalating. The markets are not liking really anything. I think a good example was yesterday. If you were with Nate and Kane and I in Closing Playbook, you saw Micron. They had earnings. They were great number wise. They beat on top and bottom expectations. But what happened? Price is down almost $30. So that little broke wing butterfly we did, worth $25 to $50. I wasn't excited about that as the trade. I was more excited about the potential profit trap if we got up to $500, but we're nowhere near that. So that's going to be a full winner for tomorrow. I have a couple of trades that I wanted to talk about to manage today. So some expirations. I have an ownership on Chipotle that I'm going to be adding some more covered calls to. We have some pinch points that might end up giving us some direction that maybe gets us profit by the end of the week. We have one in particular. This was up yesterday. We were at 174. Let's see what CR is doing. This is Crane Company. This is for pinch point. Hopefully this one's not down too much today. Perfect. 175. There's no pre-market. So if this opens, I want to try to close this one out for profit. This should be up close to about 45 to 50%. I don't have a take profit in this right now, but I'm going to go ahead and get one in. So 245, this is a 5-wide spread. So I'm just going to go after a 375, 245 times 0.5, so 122. So if I put in a 367 credit, hopefully this will fill. It's going to be close. It's basically trading for like 355, 360. So let me see if I can close this. 367. You know what? I'll just take I'll take the 355. Actually 350. That's over $100. I'll take the $100 and get out of this trade. So I'm going to put a 350 credit in for pinch point. I'll add this right now. See if that will fill at the open. Update this for pinch point. That can be a pending order. So let's go pinch point. Trade management update. CR. Let me find what trade number that is. Uh, 175. Okay, so that's trade number 67. Trade number 67 CR. Entry was a 245 debit. Pending close at 355 credit. Looking to lock in profits. Okay, we have a couple more. If I go by expiration. So Micron, that's going to be a full winner for tomorrow. That was a Newsbreakers trade. CR, that should be a winner this morning. HPQ, if we're pushing lower, I do have that long put at 18. We're trading at 18.21. See if it's down a little bit pre-market. It'd be nice if it is. We're trading at 18.15. Gosh darn it. It's not going to, I don't think this is going to push low enough. It might. We might have this thing fall low enough to get to 17.55, but we need it to go lower than that. It was a $2 long strangle. So I paid $2 for it. I need this to basically drop to $16 to pay me. I don't think it's going to happen. We might take a partial loss on HBQ this week. DLB, This one was a bull call spread at support, fell through support. I'm probably going to take a loss in this tomorrow. XSP, we have some weekly trades out. That's my near term expiration. So right now, we have a good looking double up trade. If we're going to fall into the 66 handle today, 6,600 or lower, we should have a double up trade that's looking pretty juicy. 70 cents debit, up almost a 200% right now, and hopefully more to come. If we open and press lower today, I'd like to see this one get up to maybe $200, $250. If that is the case, I will take the profit, and that would cover the cost of my loser on the upside and also help me have a net winner as a net result. Um, so anyway, we'll keep an eye on that one. Pressure is on, man. I mean, seriously, the market is definitely rolling over a little bit harder now. I think the momentum is finally starting to kick in. We do have a couple lines in the sand just to be mindful of. This 200-day moving average right here, and watching these lows. If I'm even remotely right with this type of structure, if this is a bit of a broadening pattern type look, the market rolls to the 200-day, it might get a little bit more aggressive to it. Maybe test this level around 6,500. Could it bounce? Right? If this is a support level, and then this is what's tricky about the markets and broadening patterns is because we have higher highs, but we also have lower lows. Oops, I meant to do that up there. Does that make sense? So, I mean, again, without some confirmation, this is a tough environment to call the bottom, because it seems like right now, since we did finally break this low, the market has been fading everything. And after yesterday, the market, I was a little surprised to see the market have no pop to it at all. This is the expected move we had drawn up yesterday. 54.8 on Thinkorswim, 53.6 on Tasty, and the price clearly pushed below it by maybe 10 plus points. We had a close yesterday about 10, 11 points lower than the expected move. So the market did settle a little bit inefficiently. That's good to know. I'm still not just going to assume that today's going to be a bounce back day. I think we take it for what it is. We look to find our levels, keep an eye on things. Gamma this morning is negative gamma. We're looking to maybe find some support around that 6,600 handle. If it breaks through that, we have that 6,550 zone. I mean, we need to watch it, right? So 6,600 is a decent bounce. If it hits and bounces, okay, fine. There's the 200-day moving average. If it breaks below 66 and falls lower, and we have another kind of deteriorating Thursday with fresh lows, then the double up is going to be a great trade. VIX is probably going to go up. We're at 27 VIX right now, 27 and change. I've got a chart alarm set at this recent high around 28. I'm going to set a chart alarm right now at 30. Let's just see what the VIX is doing for the morning, and we'll get some real-time gamma. All right, let me get some comments here. Let's see here. Good morning, Feeling good, good. Yes. VIX up to 27 and change. Yep. Okay, so I've got a 67.49 Tasty pre-market move. 67.49. Who's got the Thinkorswim handy? Thinkorswim showing 61.08. Okay, thanks, Leslie. We did get a fill yesterday. I did update that. That was and that's not even. I didn't chase the market. If you remember on Monday, the market had gapped up, and everyone's like, "Are we getting a trade?" It's like I just put in trades. They're pending orders, and guess what happened? Price came back to us. Even the customer support team was asking me. I'm like, I don't think for a second that this market's going to run away and go up all week. Where are we at? We're actually flat. We're down for the week. So we got filled on a participation trade yesterday. We have participation. We still have break even. We still have defense. And this all happens through Monday. Okay. Did I cancel the $45 credit? And no, I didn't. I did take that trade, and it was a loss. So, Dave, this is for you. I saw you sent me an email on it. If you were with me yesterday morning, I talked about that potential iron fly trade. I got filled for $45 out of a 50 wide spread. So I know that the trade itself, it was a sell 6,700 call, and then to that call I had to buy the 6,750, and then I sold the 6,700 put, and to that I bought the 6,650. Okay, so that trade is $50 wide. I got filled for $45 credit. There was really no management in that trade. because when this got filled, it was later in the day. And what I needed to happen is, where's the break even on this trade? If I collected $45 credit, my break even is going to be $5 off of my lowest level or $5 off of my highest level. And so my break even prices would be 66.55 or higher, or 67.45 or lower. And where did price go all afternoon? Lower and lower and lower and lower. And so if price were to hit, and I was watching this level, we had that expected move drawn out yesterday around 66.36. I mean, for a second, I was like, well, if we hit the expected move and then bounce back up in kind of true FOMC type fashion, which I was surprised to see the market go pretty much the same direction all day yesterday, right? Was it Powell's fault? Not really. Market just didn't have anything to be excited about. And we didn't have any single bounce, and it actually broke through the expected move and finished outside of that box yesterday, which for the first time in probably 50 days, first time it's happened in like 50 days. But it did happen. So point is, there wasn't really much to do on this trade outside of, well, it was a small risk anyway, and I took the loss. Okay. But this trade, the idea was to get filled for a low risk, high reward. And if the market had bounced back up, let's say from, let's say it hit the expected move at 36 or 35 and then bounce back up to 55 or 60, that trade would be worth, break even or $500 to $1,000. And obviously if price bounced hard and finished flat for the day, and again, this is obviously that didn't happen, but if we had come down and bounced back up to finish the day somewhat neutral, this trade would be worth $4,500. Okay. So there wasn't really much to do on this trade outside of when it got filled. It was late in the day. We needed that last minute bounce, or that last like 10, 15-minute bounce. It just didn't happen. If price was greater than 66.55, we'd make money, but it didn't. There was no bounce in this market at all. It just melted down all day and finished at the lows. That is one of the toughest trades in zero DTE. When you don't have a market bouncing at the end of the day, or you don't have a market giving back at the end of the day, you're sitting at those highs or at those lows. That's a tough situation for zero DTE. Okay. Because there's not really a backup plan. If it's at the lows all day long, if it's at the lows and through the lows and it doesn't bounce back, well, if you called the bottom, it wasn't safe. If you called the top and it's through the highs, it wasn't safe. That's why I have those profit traps there. So, what was my net result yesterday? We had that little broken wing for 50 cents. That made me 50 cents. I gave back 5 cents. I netted some profit on the day. I did take a little stab late in the day for that. I talked about it in closing playbook. I had I think it was a 35 by 30 by 20. It was a broken wing. I got filled for 60 cents. And I ended up closing it out for, I think, 40 to 45 cents credit. So I ended up grabbing $100 out of that trade. If I didn't manage that trade, I would have lost. Because the settlement was 64. So my break even was 66.24.40. I would have made like 20 or $30 on the trade, but I made 100, which was nice. So anyway, net on the day, it was up like $145. Big whoop. Now today is a brand new day. We've got a plus minus at 67.49. That's higher on Tasty than it is on Thinkorswim. I saw somebody put 61.30 on Thinkorswim. So I'm going to take the higher of the two, 67.49. Let's update the box here. So David, does that make sense on the management side? There's not much to do to manage this trade. The trade was in. It's a low risk, high reward. You needed a bounce. You didn't get the bounce. So that was it. I mean, it's one of those rarities where FOMC did not offer any type of neutral, noisy day. It just started down for the day, stayed down for the day, and even with Fed's comments and press conference and Q&A, the market didn't have anything it liked. So it just kept pressing lower all day. But it is what it is, man. So let's update the expected box here. 67.49. And we'll get a new print this morning. So 67.49. That'll be for today. It's going to be gap adjusted. We should be gapping lower. Here's another 0.5% lower on ES. Make sure I'm not missing a gap here. We do have SPX when we open. We should be opening low enough to hit that 200-day moving average. The first thing I want to look at this morning is trying to get that trade closed out in CR, and also looking to see where my double up butterfly spread is at with that 6,600 by 65.75 by 65.50. Because if that is offering some decent profit this morning, which I think it should be. It should be up, maybe $150 to $200. but I want this to be up. I mean, this trade can pay up to $2,000 tomorrow, up to $2,500 tomorrow if we're hanging out around this 50-point window. I'm not going to assume this is going to happen. If I've got enough profit to manage today at $500 a profit, it is safer for me to take it and cover the cost of my risk. I took a small loss on double up last week when I had the expiration on the 13th, and that was a $110 loss or something. I think it was $115 loss. So I want to cover that loss. I want to cover the call side, which is clearly not going to be a winner by Friday, and hopefully have enough to cover, $220 of risk. If I can cover that with a winner of $300, $400, $500, I'm happy. We still make money on double ups with a nice fat winner. Okay. All right. So as answer your question there, Kirk, no, I didn't cancel it. It was a loss. I took a small loss in that trade, but there was just no bounce back there. What's else? What else? Vanguard Investment Group. I mean, are you talking about just a Vanguard instrument? I'm talking, Daniel. Just hit me up on Discord if you want to talk more about that. Do you have any course so beginners will understand what you were saying and why? Hey, how about 300 people that are watching today? Do we have any foundational education that I talk about maybe every single day? Of course, yes. So, PPPPPPP on YouTube. This is your question. Do you have any courses for beginners? Yes. I have a practical options course for $27. I have a full course for $497 that I give away as a bonus for anybody that buys my services that's a lifetime member. I have a free session called One Trade Mastery. If you want it, send me an email, chrispulverpub@gmail.com. chrispulverpub@gmail.com. If you want One Trade Mastery, let me know. I can post it in the Zoom chat. I don't think I can. I think the link is too long because it's a big Vimeo download link or a big Vimeo play link. I don't think it'll post in YouTube. But this is really good foundational education just to get started. Look, nothing about what I'm saying should be complicated. Okay. Is there a bit of a learning curve to it? Sure. But give me, 60 minutes of your time and it'll start to make some sense. Give me, a couple weeks of your time joining these daily sessions. It'll start to sink in. Okay. So, do I have foundational education? Yes. It's one of my biggest beliefs here as somebody that is doing financial education and teaching traders and working with traders and trading with traders is let me give you some foundational education where once you start getting into the actual trading services and the trading signals and the alerts that you're comfortable navigating a broker platform, finding these trades and then taking the trades, knowing why we are doing it and what we are doing. Okay. So One Trade Mastery is a great place to start. I'm trying to think what's the quickest way to share that. Do this. Let me post my Discord link. I'll make this available right now for like maybe 30 minutes live. Let's go Chris Pulver Trading. Let me do some invites here. I'm going to make this good and valid for 30 minutes. Actually, I'll do it for an hour. Okay, this link is good for an hour. Okay, so if you want to join my Discord, that's in the YouTube stream. If you want to join it here, it's also in Zoom. If you join my Discord, then post a public message and ask me, hey, I want this One Trade Mastery. Hey, like just be vocal. Like, hey, Chris, I just joined. Want to know more about your One Trade Mastery? How can I get started? I want to learn more about options. And we got plenty of links in there that are already housed. That's what I built my Discord channel for, which is to put a lot of my content in one place. Okay. Vladdy says, just learning the butterfly spread is worth a fortune. Yeah. On top of that, too, not only do I have that One Trade Mastery, but if you go to my YouTube channel, we have plenty of education. So if you go to search in my YouTube channel, Options 101, and I would say I would highly recommend you check these out. One of my favorite ones would be long calls and long puts just to get you started, and then credit spreads. So if I'm going to put these in order, most basic, okay, credit spreads, one of my favorites. That's trading the markets bullish or bearish. And then this would be the covered calls and turning losers into winners. And then strangles and straddles, which are more directionally neutral trades. But watch them all. They're not that long. They're like literally 15 minutes long. So an hour of your time to cover a lot. If you want to give me another hour of your time, you could get through most of my practical options course, and you could get through most of my full course. Full course is 13 of my favorite option strategies. Okay. Why do I spend so much time trading options? Because it's always a binary risk. I know what I'm going to make. I know what I'm going to lose. I accept that risk. I expect to win, and I just place a trade. So it is price, time, volatility. That's all we're trading in options, and there are a lot of ways to do it. When you trade options, this is why people feel so smart when they trade options, is because you can build out strategies that look all different shapes and sizes, all different expressions. I'm bullish. I'm bearish. I'm neutral. I think price can go either direction. I don't know what it's going to do. I just want to trade volatility. Okay. I think volatility is too high. Prices won't move that much. You can express all these things: bullish, bearish, sideways, up, down, sideways. It's just an option trade. Okay. So to me, the way I trade options is mostly base hits. I'm not going for huge home runs unless I think the market has a big setup. Um, Otherwise, it is just a binary event that I'm looking to take a defined risk trade, go after a base hit, and just take hundreds and hundreds of trades and hundreds of winners, thousands and thousands of trades, thousands and thousands of winners. So I just added this up not too long ago. I'm about 1,100 trades into my live services and started with Prosperity Pub in the last like 15, 16 months. I've been doing this for like 12 years with education, by the way. So there's certainly a lot more trades than that. But even with what I've been tracking in these services, all these services right here, 1,100 trades in total across the board, winning about 81% of my trades across the board. This one is winning over 89%. This one is winning 94%. This is winning 71, almost 72%. This is up 60%, but the winners are huge. This one's up 85%. This one's up about 70%. This one is a hedge course, so I don't win very often, but they're big winners if I need it. This one's up 97%. So, anyway, that's a long winded way to say, yes, there's education. There's ways to get started, and it shouldn't take you very long. Give me a couple hours of your time. Give me a week or two of watching these live sessions and trading with us live every single day. It starts to sink in. Okay. All right. Vladi, I don't know if I read that comment. Learning the butterfly thread is worth a fortune. You can use them on a constant basis. Says working with Chris is like eating an elephant. If you try it all at once, just do one bite at a time. There you go. Drink from a fire hose. Don't stick your head in the full stream right away. Just stick a cup in there and just grab a little bit. All right. Got filled on the broken wing butterfly. Yes, that was the 250 butterfly that we took on engineered options. So we have a couple of those trades running. They're end of March. I'm going to do the same thing for April, and we'll give the markets a chance. So the month isn't done yet. I mean, this is a big OPEX volatility. So this is one thing that typically happens going into a major OPEX or the options expiration on Friday. We have a futures expirations, we have stock expirations, we have index expirations. It's also called triple witching. When this happens and volatility is going up into that, we tend to see volatility contract after. So coming into maybe somehow salvaging the month or the end of the month, it'll be interesting to see how the end of March plays out. Right? Is March the big ugly correctional month? Maybe. Or maybe March catches a bid and finishes. All right, so we got a 667, 666 filled on XSP for some defense. And I've got another waterfall income trade that just filled. Okay, good. We got a dollar credit filled on. Oh boy, we got some dollar action on our waterfall income. Remember those? Remember those pending orders for waterfall income? Risking 4 to make 1 with a $1,000 profit trap. Good stuff. All right. So watching, we're at 65.62. How is this only showing $90 a profit? Are you flipping kidding me, bro? Well, this looks a lot better tomorrow. I guess I can hope that we hang out around 6,600. Let's get into SPX this morning. Plus or minus is down to 59, but we had the major move. Here's my expected box. We've gapped lower. So we gapped and we're pushing right away. Let's find some real-time gamma. I'm looking for my box to open up here in the first minute. There we go. So gapping lower. We have the expected move with a gap adjusted at 65.15. VIX is still on the rise a little bit, so let's just kind of let this digest for a moment. Gap adjusted, I mean, it's way up here to sell the 66.90. I am going to go after. So we started here, expected move about 1% lower. That would be already a move of, that'd be another slide about 1.6%. Let's keep an eye on this. So March 19th, can I get some premium for the expected move way the heck up here at 66.92? We're about to find out. 66.92 is offering pretty much no premium right now. I'm going to go 95 by 67.05. I'm going to do the 2 bear call spreads up here. I want at least $1.50 on these. So if we get a rally, I'm looking to see if I can sell some bear call spreads up into those expected moves for more premium. It's only offering 35 cents right now. I'm not taking that trade. I'm going to try to get $1.50 on those bear call spreads. If I wanted to look at a pretty straightforward, I mean, the put side should be decent premium today. Let me see if we can get a broken wing in here around the 6,500 handle. So I will go broken wing, 65. Let's go 10. Maybe here, maybe a 15 wide. That'd be 15 by 20. Small debit. That's offering some credit. That's not terrible. I kind of like the $15 buffer. All right, I'm going to take this trade for 25 cents, which again, I'm not super stoked about the trade for 25 cents. But it's a, well, don't not fill me at 25 cents. All right, so let's go 20-cent credit. All right, so I got a little skin in the game with the broken wing butterfly at 20 cents. That is below the expected move with a $15 profit trap. So first things first, little trade, daily profit play. There's some risk on that trade. I'm risking 980. I'm risking 980 to make 20. Now, that's not the trade I'm really excited about. It's more like having the $15 profit trap that offers me some bonus profit. If we go to the expected move and slightly lower, my box with the expected move indicator that I created has a bottom around 65.15. My break even on this trade would be 64.75. So that, I mean, it should be plenty safe for us to make some money on this trade. Okay, so I'm going to monitor it here for 20 cents. If this also offers like $1 or more, I'm probably going to take another trade or sprinkle in another trade. Okay, I'm putting a Telegram. Chill out. All right, SPX. New trade. It's only a 20-cent trade. It's not our typical daily profit play. I've got a couple trades sitting. So SPX, 319 expiration. It's a broken wing butterfly. 65.05 put. 64.90 put. And 64.65 put. 20 cents credit filled. I'm taking this broken wing butterfly mainly for the $15 profit trap. So it's in. The working order on the bear call spreads in case we get a bounce off the 200-day moving average. New trade pending. SPX, 319 expiration. Looking to sell the 66.95. And going 10 wide. This one's pending. There's no fill yet. So selling the 6,700 and the 6,710. $1.50 credit or more pending. Okay. All right. So bear call spreads are posted. $1.50 credit or better. It's only trading for 40 cents. I'm not interested in 40 cents. Okay. Give me at least $1 on that trade. It's a pretty high probability. It's very low delta, but I want to see a price can bounce to get that thing to fill. Okay. If you want some premium today, you can probably focus on the put side. But again, be careful on the put side because VIX is up and may not show any signs of stopping. I just don't want to be, ignoring the fact that we are opening here below the 200-day moving average. Looking left on the chart, right in here, we have some levels to be mindful of. The market's already down almost 1%. Can it get worse today? Sure. Could it get better today? Maybe. I don't know, but I'm trying to stay out of the way. Okay. So what I'm going to do is sprinkle in some broken wing butterflies to the put side because I'm going to get some premium and build some profit traps out. So these trades are in. I'm going to go 65 by 64.85. That's another 15 wide and create a kind of staggered look here. This one's offering like 10 to 15 cents credit. I'm going to take the same type of trade here. Let's go maybe 15 cents credit. 10 cents credit. Give me something. Well, it's another $1,500 profit trap. I'm just trying to get filled for credit. I hate taking it for 5 because the fees essentially make it worth 0. I'll take. All right, I got filled for 10 cents. So this is another, 5 points lower with another $1,500 profit trap. So right now I have break evens at. Let me get the numbers here. So I have a break even at 64.75. Okay, 64.75 and a 64.70. So I don't have any risk for the day unless price is down below 64.75 or 64.70. And if price is even hanging out near the end of the day in the low 65s, there's going to be some bonus trap opportunities here to maybe make 50 to 100 extra dollars. Up to each one offers a $15 profit trap, $15 profit trap. So if we're hanging out near the lows of the day, this could kick in and give us, several $100s to manage later in the day. Okay. The risk on each one. So there's risk. I'm risking like basically on the fills, I'm risking 990 and 980. But to me, the risk is we're trading pretty low deltas. Okay. And there's a $15 profit trap, which kicks my break even further down. So if I go to my, 64.75, 64.70, right now, even with the gap lower and the push lower, there's still about a 90% chance of profit on this trade. Okay. Is it guaranteed? No, it's not guaranteed. But if I sprinkle in, let's do this. I'm going to go a little bit wider here. 75, let's go 95 by 70. That's 25 wide. And that would be 30. That's a debit. That's a debit. Yeah, these are all debits now. So I'll just keep an eye on it for right now. Maybe that's going too wide on the butterfly. If I went 20 wide, let's tighten up the risk a little bit. All right, see, these are all debits. So I'm just going to hang tight. I mean, like I said, I'm not stoked about making 30 cents. That's not why I'm taking the trade. I'm taking the trades because of that potential profit trap near the end of the day if we're hanging out in the low 6,500s. If we're down to 65.20, 65.15, 65.10, there is some profit trap potential later in the day, probably around like 3:15, 3:30 p.m. today. If we're hanging out around 6,500 on the nose, we could pull in, maybe $100 to $500 of profit, up to $1,500 of bonus traps if price is going to fall. So what I'm going to do here is this is my expected move box. Okay, I put in the 67.49, which was the pre-market on Tasty. We did have a gap lower. My Tasty trade open, or I'm sorry, my trading view open was 65.83. Let me check my quote stream on this to make sure I'm getting an apples to apples feed here. I can also check my trading or my charts on Tasty. Let's go. Where the heck is my chart? Okay, the data opened here on Tasty at 65.83, and the open on TradingView was 65.83. I mean, maybe they're taking the same fold. Let me check and see what dynamic trend shows. I've got an open at okay, so it's pretty accurate. 65.83 across the board. So my aggregate at Quote Stream Media 65.83. Those are my boxes from yesterday. Here is our gamma for the day. So gapping lower and hanging out. 100% ATRs run 65.30. I mean, that's kind of it. I mean, if we get our bear call spreads positioned, I mean, what does price have to do? If price tries to make an attempt to come back and fill this gap, our trades for the bear call spreads are still way up here. Way up here. Right? Those are pending orders. And it's above the expected move. This is 66.90. So I'm trying to go way the heck up here. Okay. So let's see if the bear call spreads will fill with anything. Working order. Right now it's offering about 40 cents. I want at least $1. I think it's a pretty safe trade. There's going to be some risk on that trade, but I want at least $1. And then I've got a profit trap to the downside. We can maybe take some high probability credit with those low delta calls. And let's see how this plays out. So let me get these trades organized. So I did the 65.05 by 90. And then the 65, I believe. So 65.05, 64.90, and 64.65. So this is a DPP broken wing bottom. And same thing here. DPP broken wing butterfly bottom. So that trade and that trade. I wish it was organized a little bit better in my broker platform today, but that's okay. And then working order, bear call spreads hanging out around 35 cents credit. I don't want the trade for 35 cents. Okay, Seth, I see your comment there on oil. I do have an oil trade. I posted it yesterday if you were following. We're doing some March Madness thing here with Prosperity Pub and Trading Pub. So I did post a basically like a combo debit spread on oil. I need price to move $1, and it's a 1-to-1 reward to risk. But that's about it. I mean, I think oil is just going to move and be volatile. Gold and silver, kind of the same thing. Gold is pulling back a ton. Silver's pulling back a ton. I think they're offering good opportunities to be bullish. Just dollar cost average. I think gold and silver dollar cost average is a safe trade. Don't have a time horizon. I'm long term on both. I'm long term bullish on both. There's probably some more volatility drawdown and pain ahead. The whole market could feel like crap for this next maybe 30 to 60 days. The whole market could go down, right? So just be careful. Dry powder and margin is going to be important to keep and make sure you have some buying power. People are selling gold and silver to meet margin calls. I mean, that's possible. Sure, maybe. Butterfly now showing small credit. Still that's what I did. I took the small credit on both those trades. Yep. I want them to be filled as credits because that way it doesn't cost me anything to take the trade. Yes, there's risk on it, but with that $15 profit trap, that kicks my risk a little bit further down. So 64.75, 64.70. Right now, there's about a 93 to 94% chance those will still hold and be safe. If they're testing those levels today, we get some bonus trap opportunities to maybe manage. Okay. If price comes back to fill the gap today, let me get a couple of lines on my charts. So 60, I think I did the 66.95 for the bear call spread. 66, yeah. So I'm right up here to the top of the expected move. Let's go horizontal ray. So I'm at 95. Okay, so that's going to be where I need price to stay below today. And then down here at 6,500, I need price to basically stay above 64.90 for me to not really have to worry about much risk today. So I did the 65.05 by 90. Yeah, so 64.90, anything above that would be good. Okay, so as long as price stays lower than this, higher than this, we should be making some money on the day. I'm not going to get into the trenches and kind of fart around with all this chop. The VIX is up a little bit, but if you zoom in, it's retreated slightly, right? Retreated slightly from this recent high. But I'm going to drag a chart alarm down here to see if we're actually making intraday highs on the VIX. This could be like a gap lower stall, and the market rallies up for the day, but just it's hard for the market to rally hard right now. And if the market is going to, gap lower, play around, dance around, sell off a little bit more, okay, fine. What's the damage? My break even would be around 75. The market would have to sell off 2.27% today. Not saying that it can't, but that's a pretty nasty day. And I think that if this is happening, we should be, okay. So I did, Leslie. They're posted for members in Daily Profit Play. Yep. So I posted, yeah. So the other one, DPP update. Currently have 2 small credits with broken wing butterfly. So it's a 319, 6505, 6490, and 6465. And then the 319, 6500, 6485, and 6460. 10 cents credit. So it's 30 cents. I'm taking risk in each one, but the probability profit is like 90, 94 to 90, 93 to 94%. Do I think that, the opening bell candle is the low for the day? Not really. Do I want to sell, right up here at 66.24? Not really. It's like I'm just trying to stay out of the way, trying to play this pretty safe, give myself a chance for some big profit opportunities. The bear call spreads up here, if they get filled, I still take those trades. And here's the next thing. If I get filled on these bear call spreads, I will then look at sprinkling some defense. Because if I get $1.50 of credit here, I will then use even a broken wing butterfly or some type of structure to have some profit trap material if I need it. But as long as I do defense, less than, let's say, 50 cents, I can still make $1. I'll still make 30 cents down here, have a couple profit traps, and I'll manage the day. Okay. So we'll keep an eye on that. All right. Thanks, Moses. Appreciate that. All right. So what are we at for the day? The market is down right below the 200-day moving average. Previous lows, we're back to those October lows. October 10th lows, November 20th lows. Is the market going to continue to slide lower today? We'll see. I mean, this is now a gap lower from Tuesday to Wednesday, gap lower from Wednesday to Thursday. And I mean, the market made an attempt but failed to fill that gap as well. I'm not saying this is bullish. I mean, we're down below the 200-day moving average. It clearly puts on more pressure, and we're in negative gamma. So anything right now to the upside is going to be pretty short-lived. I mean, if the market rallies hard, it's still negative gamma all the way to 66.90. So, what could I see the market doing today? Probably this, pulling back to this gap, and then see if the bears want to take it back down. Right? So I don't know if it rallies enough, maybe we get filled for $1.25, $1.50 on those bear call spreads. I'll watch the credits for that. I might even play around with the strikes and see if I can go slightly higher and still get $1. But I think we're in pretty good shape. Just remember the magic formula in trading options in the morning like this is the expected move is oftentimes greater than the actual. The implied volatility is oftentimes greater than the realized. Okay. So if price is going to stay below this box and above this box, we can safely make money. Okay. Don says I got filled on the bear call spreads. How wide did you go? I'm not filled yet, man. I mean, I'm way off that trade. I'm showing 35 cents credit on 2 bear call spreads that are 10 wide each. So did you get filled at $1.50, 10 wide on 2 bear call spreads? I don't know how that's possible. Because I'm still like $1, $10, $15 away from you getting close to that. Buyer or gold. Terry says, you mentioned yesterday you're a buyer gold of 4,600. Is this the bottom? No, not even close. I'm not calling the bottom. It's a dollar cost average. If you like gold, it's a dollar cost average. Okay. To me, gold is making its way. This is months of analysis that I've had on this chart. End of March, gold showing signs of correction to 200-day moving average. Is that happening? Yup. How did I know that? A fancy thing called the 200-day moving average at 600 plus bars, 30% overextended. I'm not surprised that it's playing out this way. Everyone's looking for a reason. Why is gold down? Gold, because it's technical. So is this the bottom? I don't think so. It's a great spot to say, I'm going to take a little stab at gold and maybe throw a couple dollars at it, right? If it goes lower, that's a great spot to maybe throw a couple dollars at it. If it goes lower, that's a great spot to throw a couple dollars at it. If I allocate to gold, meaning that we have maybe some type of correction like this, high, low, lower, high, lower, low, I'd like to build a position here. Is that a guarantee? No. But if I dollar cost average, do I think that gold can be up in the next 6 to 12 to 24 months? Sure. I'll take that bet. So that's what I'm doing. So no, it's not a bottom. Anything I'm doing is going to be dollar cost averaging here. Okay. Looking for all-time highs or higher. That's going to be my profit target. And anything lower than that is going to be taking stabs at income trades with options. I'll trade GC for futures. I'll trade GLD. I'll sell some puts. These are all good things. Okay. So no, it's not the bottom, but it's a great spot to consider maybe throwing some dollars at it because it's down from the all-time highs. It's down about 18%. Not a bad discount if you think gold can go higher. If it pulls back to my 200-day moving average, that's about a 25 to 30% discount from the all-time highs. Not a bad spot either, right? That's a almost 25% discount. It's a great spot to consider getting long. Is it the bottom? No. I'd love it to be the bottom, but I don't know if it is, right? Look at this run in gold. Okay. And I'm just trying to be realistic here. Let's say that the market's going to treat this big picture move as here's the low, here's the high, and the market says, well, here is 38%, and here's equilibrium, and here's the golden ratio. Okay. If gold falls back to $4,100, is that the bottom? Maybe. That's a 38% fib. It's at 40.76. If we pull back to the 50%, that is equilibrium on this crazy run from 2022, 2023 lows all the way to this crazy all-time high we just saw. That's $3,600. Great spot to buy. Is it the bottom? No. But it's a great spot to buy with a huge discount. And if we get back to all-time highs, it's a low to high, equilibrium, and I probably look at a 127 extension. That's just a trade. But you can position, if you have more evidence of the lows, you can position for more upside trend. I'm just trying to look at where could I allocate at a discount to see if price can go back up to retest the highs and make some money. If it goes higher, great. But I think everyone is now misinterpreting gold as like it's never going to go down. It's the greatest trade ever. Everything can go down. Everything. If the stock market goes down and gold and the dollar and bonds and oil and everything, there's nowhere to hide. You have to trade. You have to wait. You have to be patient. You have to survive. That's the freaking market. Okay. So it's just a trade. But I like the allocation side of gold because I want to build it back up in my portfolio to be like 10, 15, 20%. I'm not even close to that. I'm like 3%, 4% right now. So I'm just looking to be patient, trying to build some levels, not calling the bottom, but just trying to allocate into where I can build up my positions that I want. Okay. Let's see here. J44 says, I took a short position on gold, said to take profit at the 200 moving average. Feels strange pressing the red button. Well, I mean, it's looking good for you so far then, huh? Pio's asking from when do we start buying? I'm already buying it, man. I've been patient. I mean, here's my GLD chart. I've been patient, right? I started dollar cost average here at 474 on GLD. I've got more positions pending at 2,500. I've got the 200-day moving average here around it's around 386. I'm just going to put in these levels. Okay. If this is high, low, lower, high, lower, low, we're probably going to get close to that 200-day moving average. Don't be surprised in the near term if the market bounces hard off of that. It's a good technical bounce. Does it mean it's the bottom? No. But it's a great spot to get long for either a short-term play that's defined risk or an allocation that's at a pretty nice discount of like 25%. So I will buy in here and I will hold. And if I think that I get a better opportunity at the 200-day moving average, I'll probably take a bull call spread on GLD. I'll probably take some bull call spreads on gold futures as long as I can get the setup to offer me more reward than risk. That'd be a short-term income trade. Okay, good stuff. All right, that's gold. Silver, same thing. A lot of volatility. Silver was down over 10% today. It's pulled back a little bit. Matching lows again. If it's a high, low, lower high, lower low. I love the ratio spreads and stuff we put on for Project Options Edge. We've got a lot of these trades kind of heavily around the like $50 to $45 zone. I'd take some stabs at silver down there. That's about it. I'm really, between gold and silver, I'm going to be patient, take small nibbles, build my allocation back up to levels that I want, and I'm not in a hurry. I don't want to chase anything. It's like, come to me, I'll take some allocations and I'll sit and hopefully see some profit. Okay. Bitcoin still at 70K. 60K supports holding. We'll see what happens. It's probably going to be chopping here between like 65 and 70. Markets for the most part still down. We'll see what the 200-day moving average does today. I adjusted the VIX box. There's lows around 60. Again, I mean, why do I feel pretty safe about the trades we took today? My VIX box lows around 65.15. My break even is 64.75 and 64.70 today. Okay. Do I want a little bit more premium today? Well, what else can we sprinkle in here? If I did a 95 by 80, that's a 15 wide credit spread. If I do the 80 by 70, 10 wide credit. I mean, I don't mind sprinkling in some additional premium here. 80 by 70, that's 10 wide. Could I pull in, if the market falls, could I pull in $1 here? I mean, $1 credit at a 4 delta. I don't mind taking that trade. That way, at least I've got something to walk away with for, maybe a few $100 of upfront credit. And then if I get a profit trap at the end of the day, that's a nice little bonus. So a couple of pending orders here. Yeah, remember when we were talking months ago about gold going down to the 200 moving average? Yep. And here we are. It's getting there, right? Was it a bold prediction? Not really. It's just technicals I've traded for, 20 years. But it works. And it took a crazy move to finally see like the top was in for gold. Did I short it? No. I just couldn't justify buying at these crazy overstretched moves when it moved so far away from the 200 moving average. And here we are. So now it's okay. The exhaustion has happened. The retail crowd got caught on the wrong side of the leverage move. I'm not sure if you followed this, but this was what was crazy, and this literally marked the top. When GLD option trades matched the volume of the SPY, that was the top. And that was this day right here. That was crazy. And what that shows is again and again and again that the retail crowd got in late and they got in with leverage. And what does the market do? It increases margin requirements and allows and forces them to deleverage. It increased it 3 times in 45 days. So that really shoots them in the foot for leverage when it comes to futures trading or option trading. And, when this aggressively falls, you're basically the retail crowd that's left holding the bag at all-time highs, and you were late and you were poor timing. This happens all the time. So anyway, but what was funny is the thought that went through my brain of like, maybe I do need just to buy some gold. And I'm like, gosh, I can't bring myself to do it. And no joke, the top in silver, the top in gold, I can literally call the granny indicator because my fiance's grandma at the time asked about silver literally a day or two before the top. Okay. Never should somebody that doesn't trade, has no idea of what's going on in the markets, if they're interested in gold or silver out of the blue, calling you, asking you, it's probably not a good sign. That's how mainstream it's gotten. Same thing happened on Bitcoin back in the day. Bitcoin was running from 30,000 up to 60,000. I had friends coming out of nowhere asking me, is Bitcoin a good buy? I'm like, if you want to go from 60K to 40K to 20K and dollar cost average, I think Bitcoin's a great buy. But don't put all your money in at $60,000 and think it's going to go up. It's going to probably pull back because it does. So those are really interesting indicators, right? People you've never talked to about trading, or all of a sudden it comes up during Thanksgiving. You're like, where is this coming from? Who's talking about this right now? But that's how mainstream it gets, and you can see that the retail crowd typically is wrong, and in extremes like this, they were way wrong. But here we are again. I think it's a good time to be smart in buying, and you don't have to do it with leverage. There's plenty of opportunity to be long gold and silver. Okay. Gold is pumping now. Yeah, I mean, cool. So it does what? It pumps and fills the gap, right? I mean, these are two extreme days of inefficiencies. So, there's going to be some bids in here, but this 200 days is still my trade. Okay. So, any advice on timing? Timing what? Like, what are you trying to time? If you're trying to time the market, do it with defined risk. I mean, if your trade is like, I don't know. All I'll say is this: if you're trading short term, timing the market is really difficult. If you're trading bigger picture, give yourself 3 months, 6 months, 12 months. Timing is not that hard. I mean, if I gave myself 12 months on gold to go higher from here, do you think that would be a good trade? Question for everybody in the audience. If I bought gold right now, 12 months later, do you think that we're going to be higher or lower? Higher or lower? Any thoughts? Higher, 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 higher. Okay. Then that's a trade, right? So if I and again, for an option trade, what do I have to do? If I go out, let's just do it right now, right? Let's look at a trade right now. So I can do I don't know how far I can go out on gold futures, but I can certainly go farther out on GLD, because I did GLD, and I posted this for Project Options Edge, but I did a GLD trade. I went out to December of 2028. Okay, let's look at gold right now. Gold is 425 right now. If I buy gold at 425 and sell the 430, it costs me $2.38 to make $2.62. So I am getting on this trade, as long as price is above 430 in the next 1,000 days, I can make 262 out of 238. I can make 110% of my investment. Is that a good trade? Probably. Now, the broker says it's a 50-50 shot. But if you're bullish on gold and we're at an 18% discount, you think gold can go to all-time highs in the next 1 or 2 years, this is a great trade. Okay, I can pay 420 to make 580. What's the return here? 580 out of 420. 138%. Cost me a little bit more dollars up front, but my return on capital is even better. 138% return. All gold has to do is get above 435 in the next 1,000 days. So that's not difficult to time. I'm giving the market 1,000 days, but also keep in mind that's 1,000 days for me to realize my full profit. But is it a good trade? I think it's a great trade. But are you willing to? It's like the kid that's sitting at a table and says, "Don't touch this candy. If you wait, I'll give you more." Well, I mean, what if I stacked up a bunch of trades here and I just stacked them up for like 12 months out, 12 months out, 12 months out, 24 months out? But they're all at really good discounts of, 20%, 25%, 30% lower than all-time highs. If gold cooperates and goes to all-time highs, this is a great trade. And you could stack up thousands and thousands of dollars of income, but you're going to have to wait on it. So obviously don't overcommit, but that's a safe way for me to trade it. I don't have to worry about exact timing. I give myself plenty of time to take the trade. It doesn't cost me an arm and a leg. It's defined risk, and I'm offering myself 138% return on my risk. All I need price to do is get above 435 by expiration. Okay. And what's even nicer about this trade is, let's say that we go all the way back up to, let me use like a different color here. Let's say we go all the way back up to like $600 on GLD. Well, this becomes a much further in the money position, which will change my probability of profit from 50% to probably closer to like 80%, which means the adjustments on this will give me more probability of profit and will also increase from my 420 debit to make a maximum of a $10 credit. It might be showing $6 credit, $6.50 credit, $7 credit. I can take partial profit anytime I want. I don't have to hold this thing for 1,000 days. I just have to see price cooperate. So the combination of price and time and volatility, it's a great combo. Okay. So most of that answer your question on timing. It's like, I don't have to time this trade. If you're looking to time it short term, let's do something more short term. Here's what I would here, and here's probably something I will do. Um, I'm going to set this chart alarm right now. Here is the 200-day moving average. I'm going to add an alert on it as soon as it touches. That's on XAU USD. So that's the spot gold price that's running, 24 hours a day. Here's gold futures running 23 hours a day. Does this hit my 200-day moving average? I'm going to set a chart alarm. GLD, I'm going to set a chart alarm. Why? Because off of this level for a 1 week or 2 week trade, I don't mind taking a defined risk option trade to see if price will bounce off that 200-day moving average. So that to me that's timing the trade. I want price to come to me at a good technical level, and I'll take a stab at it for a 1 to 2 week position, maybe a 30-day position, and just see, can we bounce higher? I think that immediately, probably within 1 to 5 days, we can see price responding to that 200-day moving average, which would give me a good income trade. Is it guaranteed? No, but it's a decent technical spot. I've been patient, high, low, lower, high, lower, low. We're hitting symmetry. We're hitting the 200-day moving average. I think it's a good alignment for me. Okay. Pete says maybe it's offset by geopolitical risks. I mean, maybe. When has gold ever been, you know, gold's never been a flawless instrument. It always has ebbs and flows. But you think geopolitical risk is going to knock gold down? I mean, if anything, geopolitical risk is a good thing for gold, because if we're questioning the entire system of fiat currency, I mean, gold's a good play. I just think it's technical, man. I mean, yields going higher, sure. Dollar going up, sure. Most importantly to me is technically gold had to correct. Do you think that the narrative around gold actually changes? Do you think that the net long positions of central banks and big investment banks around the world changes? Do you think more countries would rather be in gold than dollar? Do you think China would rather be in more gold than dollar? Like, that's not going to move. That's a cruise line. That's the momentum. That's the direction they're going. This little shakeout is not changing the big picture direction of gold, in my opinion. But it's not instantaneous. And so, I mean, look, you can put all sorts of narratives to what's happening right now and say, oh, gold's not a good investment. Well, where were you 5 years ago? You know? So gold has gotten into a mania stage that now everybody's paying attention to it. And this is what's fun about it. Gold had its moment in the sun where everyone's talking about it, and now it's down 20% and everyone thinks it's toxic. Why did it have this mania run? The narrative is probably still intact. It's just a shakeout. This is going to shake up all of the loose hands. This is going to shake out all of the leverage, and this is going to be left with who's buying it. Big pockets with no leverage that are net long, and these are central banks and countries around the world that want to have more gold on their books. I don't think the narrative changes. Okay. All right. Somebody's asking us, you buying the December 28th calls on gold? Sure. I did. I'll show you. Look, I'll do it. Okay. I buy the 425. I sell the 435. It cost me $448 to buy that. I can get an asymmetric return of $552. Let me go 420 to 430, a little bit more expensive. 425, 435. I mean, that's fine. I make 555 out of 445 risk. It's 125% return on risk. All gold has to do by December 2028 is be higher than 435 bucks. Okay. Would I take that trade? Sure. If I go 430 by 440, it's a little bit cheaper. Okay. The more I go here, the more asymmetric I can get, but it doesn't have to be a big risk, right? Am I willing to risk $440 right now? Sure. Let me take the trade for, let's do, I'm just going to go at the money. So that's let me try to get 450 or less. 445 debit. Let's try it. Let me go up to 449. Filled. I filled at 447. So my trade is 447. That's the max risk to make 10. Okay. So I can make $553 by 447 risk. It's 124% return on my risk if gold goes up in the next 1,000 days. Plenty of time. Okay. Is this a one trick pony? Should I put $10,000 on the line here? It's just a stab. Okay. When it comes to my better timing of this trade in the next maybe 30 to 60 days, it's going to be I want to buy this area in maybe a 2 to 4 week window. Okay. Manish says, when the expected move is $154, why not go out of the money for even better profit? Because how high do I want to go? Right? Here's why. If right now, okay, again, if you went out of the money to make it cheaper, that's great. Okay. Here's what I would say. Let's look at this trade that Manish is talking about, which would be going way up here, out of the money. Let's buy like a 490 by 500. It's probably really cheap. Okay. I'll go out to the same expiration. What was the all-time high on gold? All the way up here to 5 and change. I'm going to see what the 490 by 500 is. 490 by 500 cost me $3. Okay. I would like more profit than that. That's going back to the all-time highs. I'd like more profit than that. This is $1.58 to make. Let me see what this is. This is like 2 to 1. 342 out of 158. I'm making 216% on this trade if gold is above $500. I mean, that's fine. I can take the same risk. Let me do 2 contracts here. I can do $316 of risk to make 684. Right? So 684 out of 316. I mean, that's 200% return, but I'm also needing now. I need price to go up $75, which sure, can it happen? Yeah, it can. Of course, it can happen. If we're at all-time highs, we're up to $600 GLD, $700 GLD. It's an easy trade. I get more return on my trade. That's great. But what am I sacrificing? Probability of profit. There's always a trade-off in this stuff. So do I like the idea of making 216% return? Of course I do. But do I love the idea of giving the market a $75 head start to make this money? Not really. And that's why the brokers offered me bigger reward, is because my probably went from 50-50 to 37%. So I'm just going to stick with this, and I'm going to take lots of these trades. Okay. Do I think that gold can be higher? Yes. I think gold is a good trade. Do I want to time gold in the next, couple of days? No. I want to buy gold for the big picture. Okay. All right. Inflation concerns, strong dollar, yields jumping, bearish pressures for gold. I'm telling you, man, the narrative on gold isn't changing. The world wants more gold. And whatever's happening in silver, I think silver price is going to be way more manipulated than gold. The world wants more gold. But is it a guaranteed trade? No. You want to know why? Because what if we have space exploration and we discover a gold nugget flying in outer space that's going to take all the supply of gold that we have right now and quintuple it? Then gold's going to have little to no value because it's so plentiful, right? This is not a guarantee. But for right now, at this time, the story that got us into this 4 or 5 year bull market that really accelerated these last 6 to 12 months, that narrative is still intact. I think what the world is waking up to is the world realizes that they don't love the fiat system any longer. Deficits are running too hot, printing money out of thin air. It's all funny money, So gold is an alternative and it has some store value. Bitcoin is said to be this digital version of it, but the market's treating it differently right now. It's just a trade, folks. It's just a trade. But I'm paying attention to it, and I think that if we come back to find the 200-day moving average, we can make some money. We can trade it. That's what I'm watching. Okay. All right. Can you please structure a 475, 485? I mean, you do it. 475, 485. Put it in your broker platform. It costs you 350 to make $10. Probability of profit on this trade is 60%. Okay. Is that a good trade? Do you think that gold in 1,000 days can be up to 485? Sure. So there you go. If I buy, actually, it's did that backwards. 475, 485. It cost me 345 to make 655. What's that return? 184%. Okay. The trade I like better is if we come down to hit the 200-day moving average, I like that trade better. Just trade something at the money, go for 110, 125% return on risk, take a good trade, make a couple of bucks. Also keep some dollars in it. I'll throw probably another $5,000 to $10,000 at a gold position for my portfolio, and I'll probably take a couple of trades to make maybe $250 to $500 in income, and just let it be a trade, along with some shares that I will keep at a 25% discount. And then I have timing of a short-term option trade, and I have the big picture where I bought a 25% discount on gold, and I ride it out for a while. Okay, Matt, that's a good point. Iran destroys all the energy infrastructure. I talked about that yesterday, actually. So everything that's happening right now, I mean, there is infrastructure being destroyed, and so for us to just assume that oil price is going to go back down to 70, $60 a barrel, we're messing up. Like it is so disruptive to the infrastructure, the supply, the flow, the plentifulness of oil that it's essentially creating a bottleneck. And I just think we're going to have. I mean, it's funny because Nate said it yesterday, like tongue in cheek, but it's like I think we're going to have volatility. And I think he's right. I mean, we're going to have a lot of uncertainty. We're going to have volatility. But look, for anybody to sit here and say like, oil's going to $200. Look, maybe it does. Where's Don? Where's Don? Don's my oil expert that called $100 in 30 days, and he was right. He was right within a week. Where's Don? No, but look at the chart on oil. Okay, oil, even during one of the worst crises this world has ever seen, was $146 to $150 a barrel. If we go to $200 a barrel, I mean, the shit is going to hit the fan. We are going to be in another crazy crisis situation of maybe epic proportions. But I don't think it's in the look. If oil goes to 150 bucks, or oil goes to 180 bucks, or oil goes to $200, I'm going to short oil because it's unsustainable. The world will look for alternatives. We will get off of oil entirely if it is unaffordable to produce anything with it and do anything with it. And I know that's going to be a complete change of how we operate. Everything has oil. Everything has gas, natural gas, liquefied natural gas, oil, whatever. Everything. But you know how fast the world is going to go to alternatives if we can't afford to do it? It's not going to happen. It's not going to happen sustainably. If we have an oil shock at $200 a barrel, I'm going to short oil, hope to make a bunch of money doing it, and we're going to see the world change trends where all of a sudden oil is no longer as heavily relied upon, and we'll have an entire. I mean, just everything we make and do and how we do it will change by demand. So I don't think oil has this crazy shock that everybody thinks. I get it's disruptive. I think that it's going to be volatile. But if you look left on this chart, how can we justify $150 oil without having a major, major crisis? The world can't afford a crisis. And if it happens, there's going to be ways to get through it. Okay. All right. What else? AI fossil fuels at $200 a pop. Yeah, whatever, man. I'm not subscribing to that narrative. If it happens, I'm selling oil, and we'll see how the world changes. I mean, look, everyone grasping these crazy extreme narratives. It's you're grasping to outliers, and if it happens, this small percentage of people out there that have traded the outlier might make a fortune. Good for them, but it's not the high probability trade. Okay. I still believe at the end of the day, markets figure this crap out. All the outliers are outliers for a reason because they rarely come true. Does this have the potential to lead us into like a black swan type event? Maybe, but that's not how I trade. I'm not a black swan trader. I get in the freaking markets and trench trade every single day, and I try to grind it out. That to me is more realistic than hoping for the one off, let's shoot for the stars with a trade that costs me next to nothing, and maybe I make a fortune. It's like that's a lottery trade. Probability profits crap on those. So I just don't think that's I don't know. It's just not the world I live in, nor do I trade it. So anyway, but I accept the risk. If I could be dead wrong, and oil goes to $200 a barrel. What does that look like? Well, I'm buying an EV. I'll do solar energy. It's like there's no way that I'm going to let gas prices go to 10, 15, $20 a gallon and be happy with it. That's not going to happen, you know. So anyway, just saying, like it's crazy, man. It's like it's so pervasive, it's so noisy that I mean, it was literally 3, 4 months ago when gold's going to $10,000 an ounce, silver's going to $500 an ounce. Where's it at now? They're down 20 to 30%. So saying oil, it's like you're telling me that in a history of 50 plus years that we're going to go to all time highs we've never seen before and almost double that. Like, okay, but the world's going to change because of it. So I just don't subscribe to the outlier stuff. And right now, more than anything, you nailed it there, Larry. Um, EVs are powered by coal and natural gas, right? I know. And David says midterms need, yeah, it's like we have a 2 year cycle for politics with midterms. We have a 4 year presidential cycle. I mean, it's just a circus, right? It's just a circus. So anyway, I'm not going to sit here and get all political. I'm just saying that if oil goes to $200 a barrel, the world's going to change, and we'll figure out how to trade it. If gold goes down to $3,000 an ounce, we'll figure out how to trade it. If gold goes up to $10,000 an ounce, we'll figure out how to trade it. If the S&P goes down 1% today or 3% today, we'll figure out how to trade it. Like, live in the present. It's a lot more fun because the angst of the future or the regrets of the past, they don't freaking matter. So, there's my PSA rant for the day. All right. So let's see what the day is going to unfold with. Markets are retesting some of the intraday lows. So here's our open. We're kind of back down to it. Let's see what happens if price is going to leak a little bit lower. We got some profit traps sitting down here around 64.90. Like I said, I wouldn't be hating a $6,500 level today. I wouldn't be hating anything like that at all because we have a nice little profit trap. I do want to look at the broken wing for double up right now, or the butterfly spread rather. So it's up $170. 250% winner on this trade. It covers the risk of this trade. So this one's going to lose 120. I'm up 185. I'm going to try to let this run through today because let me take a look at this trade right now. I'm going to build this trade out. We structured this trade already. Let me see what this looks like. Damn it. I'm trying to think if I can put this trade on and actually. So the trade's been open for 3 days. It expires tomorrow. I want to get a sense of what this thing looks like coming into expiration. I saw something kind of cool on Option Omega. So Option Omega, which I have the back testing platform. I think we can actually do model trades now and get a better sense. Yeah, this is pretty sweet. Let's go models. Oh my gosh, you turds! I don't want to subscribe to modeling. I already pay these guys like $500 a year. What the f? Oh, it doesn't even give me a price. There we go. What? I pay these around $600 a year and they don't give me modeling. Come on. Back testing standard. It's like I'm just gonna talk to him. That's stupid. I'm curious what the model is. Anyway, I like this because it was going to be a more realistic. I guess the same thing is like if I subscribe to Option Strat, but since I already have the backtesting software, I run this stuff all the time. I thought I've seen the model stuff. Anyway, whatever. But here's Option Strat. So here's the trade I built. Let's go butterfly spread. So I did a was it a long call? Long put? Yep. So I did the 65.75 by 50 by 6,600. Expiration tomorrow. Okay. So right now, we are trading at 65.75, which is my pin price. It's showing them about $180 in the trade. Because I took the debit for like 70 cents. So I'm obviously getting us a decent profit here. But what I'm watching is let's go to the end of the day. I'm curious at the end of the day. So by 4 p.m. Okay, let's go to tomorrow. Let's go to the end of today. So by 4 p.m. today, this trade could probably be up about $250. Well, let's do some math. I lost 110. I'm going to lose 120 tomorrow. Oops. So 110 and 120. I'm down 230. I mean, I can make enough to cover my butt. The magic of this trade, I suppose, would be the morning of tomorrow. I just don't know if it's going to stay in that 50-point range. Here's opening bell tomorrow. All of a sudden, this could jump up to maybe $400 or $500 of profit by tomorrow morning if it's in the same 50-point window. And by the end of the day, it's like this trade is worth up to $2,500, but I've got to be perfect, right? That's the trick of the butterfly spread at expiration. You've got to be perfect. So I guess what I'll do is I'll just hang out in the double up trade. It's up about 250%. It's not bad, but it's not covering the risk that I've taken. So everyone that's with me in double ups, what we did is we took a loss on the put side last week because it wasn't low enough and it was down like $110. I added this because I thought it's still a good trade to me. I'm going to take the trade. And now we have a 25 wide for 70 cents. Now, I want this trade to offer up maybe $300, maybe $350 of profit. That would still give me about $200 net on the trade. But to get that today, we'll see where price is at. If we hang out around 65.75 like it is right now, this could actually be very good towards the end of the day to make a few $100 more. Coming into opening bell tomorrow, if the market doesn't have a big gap one way or the other and we open up tomorrow morning, all that time that passes into this trade could probably double this position and maybe offer us, $400 to $500 profit by tomorrow morning. I'd probably take the trade off and then sit back and watch and see if we'd be lucky on holding it all the way to expiration. It's not a high risk trade at all, in fact. But I also want to try to make sure that I'm safely protecting some profits, right? So I'm just going to hang out and see what this is doing for the rest of the day. If we're by 3:30 p.m., 3:45 p.m., and this is up like $300 to $400, I will probably take some of that profit and just be done with it because that'll wash my risk, and my win, and I'll still make a couple $100. If I want to hold this thing into tomorrow morning, obviously if price slips through that 50-point window, I'm not going to make any money on the trade at all. So point is if I have some profit, I'm probably going to take it near the end of the day. If you want to roll the dice and let it run into tomorrow's open, see if that offers like another big jump in profit by maybe 30 to 50%. So that's my plan for double up. Okay. All right, what else? Am I trades in South America? Yep, I'm in ILF, which is Central America, or Latin America, rather. So ILF, I'm long ILF. This one's getting beat up by the risk-off tone of the world. The world is seeing some risk-off trading along with the U.S. right now. I still like ILF long. Okay, I still like EWZ, which is Brazil. So yes, I'm in both, actually. I own shares of ILF and EWZ. EWZ is probably one of my better trades as far as like big picture. I bought this thing around $20, $21, $22, and I would love to hang on to this thing until it hits maybe 50 or 60. Could be a long time. Could be, I mean, if I'm lucky on the technical side, this is the first time in a while that we're just breaking the structure. So if this is a break retest, even going to symmetry puts us around like 50 bucks. I'd be happy to take some profit there. I can take the profit there. I can peel off half my position and then let the rest run with house money and see if we get really lucky to a run all the way to like 80 bucks. Right. So yeah, I own EWZ and ILF for that, non-US exposure, along with SCHY, which is it's like 200 different tickers. This one is a lot of Europe though. So I'll just give you the tickers. This is all my non-US stuff. Non-US VT, which is total world. It's only like 40% exposed US stocks, 60% world. SCHY. I have EWJ for Japan. I have AFK for Africa. I have EWZ for Brazil. I have ILF for Latin America. And I think I'm playing the EEM and the ACWX. I think that's the MIXI X the US. Let me double check that. Come back to Schwab in a second. So ACWX. Nope. ACXM. Damn it. I can't remember what it is. Anyway, I trade this, and this one's incorrect at the bottom. Let me find it. Where is it at? So this is world stuff. Oh, there it is. ACWX. There. So I have some shares of all of these. These are mostly non-US plays. Is it a guarantee these go up? Not really, but they're way undervalued compared to the US markets. So if just the world repatriates a little bit, the world can do okay. The world can become a little bit more, independent and not rely as much on the US, or even just try to distance themselves from the US with the uncertainty. And I think these can do pretty well and reflect that. So that's part of my equity mix is this. The downside is there's not a lot of great option trading on these. It is mostly like I just dollar cost average. So that's the question for J44. That's what I'm using for non-US stuff. David, let me take a look at that. Leslie said I closed it for $360 credit. So did you make a couple $100 on that, Leslie? So your 70 cents closed it for 360. So you got 200 some dollars on that trade. That's pretty good. Yep. All right. Tomorrow's triple witching. It is. Yep. Okay. Couple things. Markets are still pretty choppy for the day. Keep an eye on our current levels. Let's see what the market gives us for the entire day. I'm still kind of racking my brain with what else can I do today. Iron Condor for 220. What was that? AR. 220 credit. Is this a profit? The hell? Hang on. I just don't remember that trade, which is rare. This has to be a buy, right? Nope. I'm selling the range. Well, that's interesting. Okay, so it's a high credit. Oh, this is out to May. I'm not even worried about it. All right, never mind. I'm doing an Iron Condor on this one. This would have been filled. I'm guessing this is what is this trade? Like, I've got to have a service attached to this. Let me figure out what it is. Did I do this for pinch point? I think it just closed for profit. Hang on. Yes. All right. We just hit profit. Now I feel better. Pinch point, hit profit, winner. $1.46, close out for 220 debit. Or I'm sorry, $1.46 debit, close out for 220 credit, hit the 50% take profit. Yay. That's a lot better. Okay, let me update this in the tracker. That is trade number 107. Trade number 107 just closed out for 220 credit. So that is $74 out of the 146. We up 50.7%. Closed. Profit target hit. Very nice. Another one in the books for old Pinch Point. So trade management update coming in Telegram. Trade number 107. AR. That was nice because the expiration was out to May. Entry $1.46. Closed 220 credit. Broker filled for 50.7% profit. Voila. Love it. Yep, Pinch Point. Got it. Nice. Because at first I'm like, I would do an iron condor on that trade. Nope, it was a Pinch Point, classic pinpoint trade. Nice double up, or a nice breakout on the volatility. Okay. CR. Oh my gosh, you freaking turds. This thing was up in profit yesterday at 174, 175. It's down today. Dadgummit. Let's take a look at CR. I was hoping this one would hit some profit. All right, let's see if this will stabilize and maybe bounce for the rest of the week. I don't know. We got to get a bounce tomorrow. All right, let's see if we can gap fill tomorrow. That gap fill will be 175. That could actually be pretty good. Let's see if we hit that profit tomorrow. Otherwise, I'm going to take a small loss of $70, which I don't want to do. I mean, it's better than losing 245, but if we bounce up tomorrow at all, that would be a good winner as long as we get back to one. I mean, essentially, we should be down $30, not 70. So we're trading at 245 debit, which puts my break even at 172.45. So if we push up to 173 tomorrow, we're making money. 174 tomorrow, we're making money. 175, we're in full profit. I'm going to let that one ride. Yep. Today, so tomorrow's triple wedging. Could the market be a little bit lackluster today because of triple wedging tomorrow? Maybe. Right? But I don't know. I'm just going to hold off and just kind of see what the day does. I've got some profit, kind of locked in and guaranteed. I didn't get filled on the bear call spread. I don't want to play with this intraday volatility. Markets, gamma wise, it's still lots of support right around this like 65.50 handle. So if the market just kind of stays here for the entire day, I don't know. I mean, kind of the same thing we talked about yesterday, which is if I get a cheap enough iron fly, it might offer like 2-to-1. I just don't know if I love that trade today. We're hanging out kind of right around this opening price around 65.80. So let's look at like 75. See what 70 by 90 looks like. Let's go 50 wide. So that'd be at 20. And then 40. I mean, that's better than 1-to-1. I still think it's a lot of risk. I don't know if the volatility is going to stick like this, but that's a fairly safe trade. I mean, you'd have a break even. Let's see here, about $40. So break even's around 66.10, and break even's around 65.50. As long as price stays in that range. If I go a little bit tighter to price, like so, now that's 40 wide and 40 wide. More profit potential, same risk profile. About $30. Now my break even would be 66.10, or my break even would be around 65.55. Price stays in that zone, you can make some money. You're risking $1,000 to make up the $2,400. But what you're committing to if you did a trade like that is you're committing to price basically staying here, doing next to nothing for the day within about 30 points. Could it happen? Sure. But if we rally up here towards 25, it's like that's a 40-point move. That trade's worthless. If we fall down to the 100% ATR at 65.30, that trade's worthless. So I'll pass, but just kind of looking at like, what is the day going to give us? I don't know. I'd like to see a couple things. Either one is we slowly make our way down to these lows again, having some profit trap opportunities at the end of the day, that'd be the best trade. Or we work our way up a little bit, we fill this gap, and we just kind of hang out here for the day, and we get filled on some bear call spreads. We get paid, $100, $200 up here, and we still keep our 30 cents with no profit trap. We make, 150 to 200 bucks in the day. That's fine too. If it goes nowhere, then I'm just going to make 30 bucks and no profit trap. So I guess I'll grab my coffee this morning. All right, what else is going on? Any other questions? We're good? Okay, what else you want to take a look at? We talked a lot about gold and silver. We talked a lot about oil. Look, if you're not cut out to trade a crisis, then I don't know. You maybe have to give up trading every 4 to 5 years. It's going to happen. This is why dry powder matters. This is why margin matters. I'm still sitting on about 40% cash intentionally. I haven't seen a spot or level or anything that I'd say that I'm willing to deploy that capital in full. Not even close. I'm just taking little nibbles, trying to trade smart, dealing with some volatility, but that's it. I mean, has volatility broken highs today? Not really. Is the market up today? Not really. It's just a volatile market. I mean, other than 2022, I can't remember a time in recent memory where the markets were like steadily above 20 VIX. So, I am going to back off a little bit from my premium selling. I've been taking plenty of stabs like Project Options Edge. We've loaded up a lot of trades this year into, September and into December, which I'm happy on those trades, but I need to let those marinate a little bit and not just keep stacking them up. If the VIX gets up into the 30s, I'll probably sell a bit more premium. I'll do a couple things. I might sell some premium and I might short the VIX at 30 plus because, going to 30, it's always a question of, are we going 30 to 40? Or are we going 30 back down to the 20s? So that little flare up there to 35, I mean, that was a pretty good retreat. VIX dropped about 37% in a week. And now we're just back into this like 25 to a 25 VIX. It's a very volatile market. Let me take a look at engineered options. Yes, I think we had a couple defense trades maybe getting filled. I got waterfall income that I know filled this morning as well. So I had a 667, 666 fill. That's participation. I had the break even 663, 662 fill as well. These are expirations out to Monday. That's weird. Did I take 2 trades? All right. So it looks like I doubled that trade on accident. So 667, 666, 7 and 6. This is EGO weekly. And then I have the 6, 6, 3 and 2. That's EGO weekly. And then these are my iron condors that I did at the 27 VIX. All right, so we have a couple of weeklies going. The 667, 666. These are the monthly ones getting filled. Okay, that makes sense. All right, so we've got the weeklies. This is a monthly, my bad. So this is a monthly trade. Let me rename this one. All right. So my weeklies for Monday, I have the 667 by 666, and then I have the 663 by 662. That's my weekly trade. Let me update that in the tracker right now. So 663, 662, this is now filled for 2 contracts. I'll update this in Telegram. Okay. Engineered options, XSP, break-even level. That's a 663, 662. Okay, filled. They're credit spreads. Yes, Carlene, they're put spreads. Just got a news feed that the administration is pushing for loosening capital restrictions after the 2008 crisis. I mean, that's why the markets were so loving the Trump administration is it was all about deregulation, all about, grow, grow, grow. Any like don't let the government stand in the way of growth, right? But we're sitting at the one percentile of all time highs in valuations. You've got Buffett that's a longtime value investor that's been a net seller of stocks for the last 2 years. Um, you've got an oil crisis. You've got gold and silver going crazy. You've got questioning, the integrity of the fiat system. There's just a lot of stuff swirling around. A lot of stuff for the markets to digest and navigate. Climbing the wall of worry seems to be a taller task. If anybody is a rock climber, you go from like the big open, fat handles that are easy to grab to like the little tiny nubs where you got to like dig your fingers and claws in. Right? It just seems like it's a little bit harder to find the footing right now because the market's slipping. So anyway, I'm tempted to take this 659, 658 defense for a bit less than 50 cents. I mean, it's optional, David. I mean, sure, but if we slide lower and it gets filled by tomorrow, I mean, why not take the trade tomorrow and let it get filled where you want it at 50 cents? I don't know. I'm just saying, like, we've been doing just fine by just letting price be price and respecting those 50 and 100% levels. So the next defense trade that I have sitting is the 59.58. What's it trading for right now? 59.58 is trading for, I mean, yeah, it's right there at like 46 cents. Okay. So it's close. I mean, XSP live is 658. It's very close. If we slide down today to like if we slide down to like 655 ish. Yeah, I mean, if we slide down to 655, it probably gets filled. Low of the day is around 655 is like revisiting the lows for the day. So I don't know. I'll just hang out, see if it fills at 50 cents. GS Global says $78 trillion sitting on the sidelines. Yeah, but it's always sitting on the sidelines. I've heard that saying for 20 years. Money sitting on the sidelines. It's always on the sidelines. I think when the money is back in the markets would be post-COVID and maybe post-Liberation Day. That's probably where the market had the most participation because we had such a ridiculous discount in the market in an immediate crisis shock that all the money just flooded back in. I mean, COVID that COVID crash was nuts because every stock you looked at on a weekly time frame, it was like, man, we haven't had this price for 10 years. I'm going to take a buy. I'll take a chance. And it was just like, if anybody's waiting for discounts, it just happened within 30 days. So, that was a lot of money also thrown into the system with $6 trillion globally. So that was one time that money got off the sidelines, but there's always money on the sidelines. All right. We'll see. And it's funny you say that $7-8 trillion sitting on the sidelines when if you look at what Bank of America shows for like investments and household exposure, I mean, the retail crowd is pretty invested and pretty exposed. I don't know. There's look for every sliver of optimism. There's probably 5 to 10 things of pessimism. You just got to figure out what you're subscribing to narrative wise. I mean, I'm a trader, man. There's going to be positive and negative. It's so much noise to filter through. I don't, and that's why, I mean, and again, no offense to somebody that's like, I'm a fundamental trader. I don't know how you're a fundamental trader because if you subscribe to one narrative, you can dive so deeply into that narrative, believe it with all of your heart and all of your brain and into every fiber of your being, and you can still be wrong. And if I look at a chart and I can see that things are going down, I shouldn't be buying stuff. If I see a chart and things are going up, I should probably be buying stuff. So I always say this for my personal trading. It's like I'm fundamentally aware, but I'm technically motivated. Like technically is what I'm focused on. So, but it's funny. Like the fundamental side is just so noisy. It's so noisy. All right. Anyway, let me give you some key levels for today. We are sitting at the 200-day moving average on the CFD. We're sitting just below the 200-day moving average on. This is literally at the 200-day for SPX. Opening bell, closing bell, SPX. I mean, tomorrow is going to be a really interesting day because is this going to be kind of the make or break for the market? Can we come back up and be saved by the 200-day moving average? Yeah, maybe. Right. If today is a bit of an indecision candle, could this be bearish decision, indecision, followed by a tomorrow, maybe bullish? There's a morning star. Could be saved by that in the short term, even though that could get faded again. So this is a bit of a candlestick formation that's underway. Maybe we fill that gap going into, tomorrow. Maybe this is a little island that all of a sudden gets pushed and thrusted lower, and we've got this support, this support. We sell off a little bit more, and then we bounce back next week. We'll figure it out. Okay. All right. Any other thoughts, questions, concerns? I'll throw a little session at you. I've got a newsbreaker session to discuss today. We have a full winner on newsbreakers for Micron coming into tomorrow. Micron is down. We had a profit trap around 5. Ooh, hey, Micron. Okay, this maybe got a little bit more interesting. I was like, there's no way this is coming. It's probably still safe for us, but man, let's see Micron start pushing up to like 490. Okay, let me see something here. This isn't really going to happen until tomorrow, but let's go to Micron. Trade was filled, so anywhere between 25 and 50 cents. I don't know. I mean, I don't really have any risk in the trade. Here is the, let me show you the analysis of it, see if I can find this. So right now, see if I can zoom out of this the right way. All right. So, I mean, this is okay. We're trading at 456 right now. It's getting a nice little bid, which is encouraging because it was great earnings for Micron. It was, doubling or tripling its revenue, something insane like that. But the nice thing is because it started about 425 to 430, now getting up to this expected move is going to be very difficult to do, which means our trade is pretty darn safe. But the nice part is even if this thing gets juiced to the upside, this profit trap might kick in a little bit if we're lucky. And so, again, hypothetically, if price comes up to recent highs around 470, if we can get above 470, this might actually offer us a chance to get into like this 480, 490 zone. It might offer a profit trap. It might. Let me build this trade out really quickly and show. Let's go Micron. And this was a broken wing butterfly. So I'll just do a long call fly. So I sold the 500, bought the 495, and did the 507.50. So that's the trade that I took. We pulled in like 25 to 45 cents yesterday. I took the trade for 25 cents. It was posted yesterday in my build a trade for 40 to 45 cents. I think 50 cents was available, but anyway, 45 cents. What I was going to say is going into expiration tomorrow, this is what I kind of love about it. If we get Micron to get up to like 485 or 490, there might be a way to pull in an extra bit of profit. Okay. Like you might be able to pull an extra $50 out of that trade. If it gets to 495, now we're talking big fat profit trap opportunity. So it's a very, very low probability that happens. Looking at the current option chain, getting all the way up to 490 plus, it's like we have like a 5% chance of that happening. But it's safe that the broke wing's probably going to make us credit. So anywhere between like 25 and $50 a contract. But if this thing keeps jumping to the upside, you might ramp this thing up and maybe grab an extra 50 to $100. It's not awful if that happens. So anyway, I just think this is encouraging to see that for a stock that was so like it's been one of the best performing assets of the last 6 to 12 months, and earnings were stellar, and it was down yesterday. So I think the nice thing is this actually would have been a really good calendar spread because this is where we went into earnings. It moved lower and it's right back into the center. That vol crush at a calendar spread would be freaking perfect right now. But wishful thinking. So anyway, it's going to be a winner most likely. It's just a matter of if we get a profit trap to make it a little bit more bonus worthy. No. Jess Global's asking about shorting credit funds. It's too late, man. It's too late. If you want to short them, you'd already be short. And my question is, do you want to be a short seller? Do you want to be a short trader? You're betting. I mean, you're betting on things like. So what are you doing if you're shorting those credit companies? You're short. You're basically You're trading 2008 and hoping to be right. Um, I just think it's hard. I think it's hard. It's tempting, right? There's cockroaches, there's credit issues, it's a bubble. Okay. I look at it as big picture. If this is one of the many things that mount on top of the market and finally, I mean, just imagine the market's just like a normal, capable human being walking, and then you put a backpack on it, and then you fill that backpack with one rock and call it inflation, and then another rock, and it's uncertainty, and then another rock, and it's fiat, blah blah, whatever. Just stack the rock up, and now it's getting too heavy, and the market's moving slower and slower and slower. It's just weighing it down. Does it turn into a crisis? I don't know, but do you think for a moment that any of those companies, Tricolor, Blue Owl, BlackRock is ridiculous. Blackstone, ridiculous. Yes, they're gatekeeping redemptions right now. I know that's a concern. It's making a lot of headlines. But again, I do not think that the Fed or the JP Morgans, the Goldman Sachs, all these massive banks that are too big to fail, we literally saw it in 2008. I don't think for a second that they wouldn't step in and save the private equity market if they had to. They will, and it's crisis management. So no, I don't want to short it. I'd rather just see if there's a big enough discount to then buy something to make more money versus trying to be short and hoping that like the sky is going to have to fall. It's just so hard to be a bear and make money. It's so hard to be a bear and make money consistently. You can be a bear, but I think there's a time and a place. I think you can hedge. I think you just buy in discounts and keep cash at the ready. OTF and pays an 11% dividend. What's OTF? Okay. Okay, 11% dividend, but I mean, again, this stuff is just okay. So you have an 11% dividend, but your stock is down 60%, right? Yeah, I mean, you're down 30% with a dividend of 11%. You're not making any money. You're going to hold on to this thing for a while until it stabilizes. So we'll see. But I have no interest in shorting this stuff. If it turns into a big old fat bubble, then what I'll do is I'll just wait for the biggest ridiculous discounts and I'll buy everything. If I own the S&P at 40 to 50% off all-time highs, I don't care if I sit in a drawdown for a year or two. I'm going to hold the S&P at a 50% discount and hold it all-time highs to double my accounts. It's not pretty, but pretty confident that's going to happen at some point. Even the dot-com bubble, the market was down over 50%. It took 7 years to get back to all-time highs, but we did it. You doubled your money, only to face another crisis. So, I don't know. Just play the game. Play the game. All right. Yeah, I just wouldn't touch any of that crap. I mean, when you hear the 11%, it's like, yes, it's enticing. I'm looking for 11% yield. Okay, but risk-free, man, risk-free rate is 4%. So there's no way you can tell me that you're going to get 11% return without taking on some excess risk. Risk-free rate is over 4%. So anything that's saying we pay you 10%, we pay you 12%, we pay you 18%, we pay you 60%. There's risk, there's risk, there's risk. 4% is risk-free, right? U.S. 1-month Treasury yield is 3.7%. The U.S. 3-month is 3.7%. The U.S. 10-year is back above 4%, 4.25%. That's risk-free rate. So anything over that involves risk. Nothing's guaranteed. And even this is being questioned. Even risk-free is being questioned. But as a yield, I think it's risk-free as long as you hit maturity, as long as you hold it to duration. Anyway. All right, let's do this. Let's play a little sesh. We got a little newsbreaker session. A couple updates from today. Daily profit play. I'll keep an eye on things. It might be a, very quiet day. I'm not going to force any trades. I want to see where prices go to the end of the day, right? If the end of the day prices are making fresh lows, that's going to be a good sign. Okay, couple things. If prices roll down further, this could be a good sign coming into the end of the day. My strikes at 65 and 64.90. Really, my break evens, I know that my break even is 64.75 and 64.70. So if this is coming into the end of the day, this is offering some profit trap opportunity. If price is going to do this, where we have a gap, we have a low for the day, and the markets just do this all day, it is what it is. I didn't trade super aggressive. The implied volatility is greater than the actual or greater than the realized, and that's just one day of many. Um, to be fair, and I've got to ask this: did anybody use yesterday's inefficiency close to get a little bit more aggressive today on daily profit play? Did anyone use the slightly lower close today to get more aggressive on today's daily profit play? So when price opened, if you did like your 10 deltas or your 15 deltas, I'm sure the premium was decent, adequate. And right now, hour and a half into trading, you're probably seeing some good profit because markets haven't done anything. Okay, Ernesto did. Brett said did a standard 10 wide, 155 out at $1. Perfect. Yep. So I mean, again, just because the price is cooperating, that makes sense. We do this stuff all the time. Not a bad trade. Obviously, not a bad trade. I played a little bit more defensive. I played a little bit more conservative. Using some profit trap zones outside of my expected move. Trying to use the expected move up here. Just trying to safely position myself where if that way price is going to rally, I can pull in some credit. If price is going to fall, use my math. Use my probability of profit. That just keeps me pretty safe day to day. So at the end of the day, this is what I'm watching for. If price is just hanging out between 65, 70, and 60, let's say 60, well, just 65, 70 to about 66.20, there's about a 30, 40 point range there. If price is in here, I'm going to walk away today with 30 bucks. Big whoop. Okay. If price comes down to the lows and goes lower, maybe testing like 65.20, 65.10, we did make some fresh lows. Our previous lows were like the 66 25. We broke that yesterday. We gapped lower today. So we're obviously at some fresh lows right now. We do have triple witching tomorrow. We're at that 200-day moving average. The market's not showing any signs of life today. So tomorrow's a big deal, right? Because if the market's going to show any semblance of responding to that 200-day moving average, then price can maybe go up and gap fill by tomorrow. Okay. All right. So what I'm saying is, by the end of the day, if I find another trade, I'll post it. Otherwise, I'll sit down here with my profit traps. I'll wait and see if price can maybe get a little bit more momentum here later in the day, and maybe grab a small credit spread up here. Other than that, I'll just kind of hang out. We'll do this again tomorrow. We got some managed trades for pinch just hit a profit. We got a couple more to expire tomorrow. Project Options Edge, we have a full winner for tomorrow on Zoom. Zoom needed to stay. Let me check my Zoom. I think it needed to stay. It's like 99.5% chance of profit. It was a ratio spread. So here's Zoom. Expires tomorrow. It's worth 150 bucks. It's up 136 today. Trading at 76. Price has to come to 62.50 tomorrow. I'm not worried about it. There's a 99.5% chance of profit. Just take the full profit. Let it expire for the full credit tomorrow. That'll be a nice winner. And then we will see on double ups. I'm going to keep an eye on that for the end of the day. Like I said, if we're hanging out around like 65, 75 today, that would be pretty nice to see what this thing is doing by the end of the day. I'm looking at my double up. Where did it go? I've got a lot of trades running on SPX right now. Double up. This one. So right now, my 70-cent debit is up $180. Is up 250%. Not bad. Okay. I'm going to be a little bit greedier and see if this thing can kind of hang out with today being really chill around that like 65, 75 zone. If it is, I want to see what this trade is offering for profit at the end of today. If this is up to like $250 or $300, I might just take the profit, walk away, grab a couple $100 net. And from there, I'll be a cheerleader for tomorrow, because if it stays in that 50-point range, this thing is worth up to $2,500 tomorrow. If we're in the same 50-point range, it's a profit trap. But if it's above 6,600 or below 6,550, there's no profit on it. So it's kind of an all or nothing trade. I want to see if I can get a little bit more profit out of it if we just hang out around. Opening price today was 65.83. That's right around our pin price at 65.75. So I'm just going to hang out and see if this can offer a bit more profit today, and maybe I'll protect it. But if we can grab, 300% of this trade, I'm pretty stoked with that. That's a good winner, obviously. Love those winners. So, all right. Good stuff. Good stuff. Yeah, Brett says still my favorite in and out, an hour profit. Awesome. Brett, good stuff. Yep. And so, I mean, so far today seems pretty darn good. Markets in a very typical fashion, expected is greater than the actual, imply volatility greater than the realized. The day isn't done. We'll see what happens, but I'm going to keep an eye on my credit spreads up here. And if the market, gaps and then falls over, I'm going to see if this is anywhere close to my profit traps at the end of the day. So I will be watching. Okay. Let's see here. $1.70 trading at $1, Larry. Good stuff. 66.55. Okay. So yeah, you definitely stuck to like the mechanical rules of the opening price. Got it. Got it. Yep. Market's up a little bit. It's up a little bit. It's on a comeback. I mean, could we see a bid this afternoon? Sure. I mean, look, we're trading at a 200-day moving average. It usually matters. It's a big deal, right? The market responding to this 200-day moving average wouldn't be a terrible surprise. Does it do it today or does it wait and do it tomorrow? Maybe it does it today and then tomorrow it fades right back down. I don't know. But we'll see what the day gives us. So, all right. Deanna, if you're there, let's fire up a little news breakers. Just a quick recap. I'll keep an eye on daily profit play. Waterfall income. I'm going to update the tracker because I know we got filled for a couple of trades. We had a dollar credit fill, and I think we had another 50-cent credit fill. So I'll post those trades I'll post those trades and I'll update them in the tracker as well as post them in Telegram. I'll find out exactly what they were. Double ups, watching for that butterfly spread we have that closes tomorrow. Pinch point, nice winner. We got a couple more expirations for tomorrow. Engineered options, we had some. It was participation, break even, and that's it. I had a couple of levels filled for the end of the month, but just for next week, I still have participation and break even. Project options as we'll have a full winner on Zoom tomorrow. And if anybody wants some one trade mastery stuff, do I have anybody that's in Zoom that's here for one trade mastery or wants a one trade mastery? It's a free 70-minute session, just a little bit more time with me, a little bit more like, hey, this is a nice little lesson, maybe a little more options, option foundation stuff. You can send me an email, chrispulverpub@gmail.com. Okay. So I do that for any follower, any member. If anybody's interested in this expected move indicator, I sell this for $20. You just have to email me. I'll give you the TradingView access to it. So it's TradingView invite only, or it's Thinkorswim. Throw it on your charts. But just send me an email, chrispulverpub@gmail.com, asking for the expected move box. I use this thing every single day. It's not just for 0 DTE. You can put this on any index, any timeline. You pull the data from your broker platform, so I can trade. We talked about gold a lot today, right? If I did a trade on gold and I thought, okay, I'm going to go out to December of 2028, gold can move 153 points. Call me crazy, but if I went down here to sell, honestly, this is a pretty freaking good trade if you ask me. Just for fun, if gold can stay above the expected move here, if I buy the 280, let's try like a 300 by 270. I'm just curious what this trades for. Okay. That's not bad. This is actually pretty good. I could do a $1,500 profit trap and also get $250 of income if I'm willing to own shares of gold at 270. Now, the break-even price in this trade, I don't know, just spitballing there in the expected move, but 270 minus 15 minus 250, I'd own GLD at 252. Would anybody be interested in owning GLD at 252? Anybody? Show of hands. This guy, I would. 252. All-time highs down to 252. We would be owning at a 50+% discount. Okay. Now that's a good trade. And granted, it's out 1,000 days. So it's not like I'm excited about making $250 1,000 days later. But the ownership opportunity to me would be spectacular. So on a margin account, if I can get $250, only tying up about $32.71, I think that's a pretty good trade. If I want to tighten it up, I can make $300. Tighten it up, I can make $400. Now that return on buy power is even greater, but I have less of a profit trap and my ownership price would be higher. So I'm going to go 15 wide, take this trade. I've got plenty of cash. So these accounts here are portfolio margin, portfolio margin, portfolio margin, portfolio margin. I'll take the trade here, tie up about $3,200. make $255. If I own it, I'm happy to own the 100 shares and own it way, way, way cheaper. Okay, I'm going to take this trade. This is another Project Options Edge trade. If you want it, it's out in the distance, which also means like I'm trading here. I'm trading long term with you. Okay, all right. Let me take this trade. So let's go. Let's see if we can get two. So mid price has changed to 240. I'm going to try to get 255. Let's try 260. See if we can get a beneficial fill here. So let's go this trade. 260 not filling. Let's try 255. Let's try 250. Try 245. Mid price is 240. Okay, I'm just going to go penny down. All right, filled at 238. 238. Hopefully that's the sweet spot for all these accounts. So 238 pending. Let's try 237. 236. Really? 234. I'm not going to take less than 230. Filled at 233. All right. 230 is going to be my lowest credit here. 231. Crazy. 230. I'll let it pend at 230, but not taking less than that. All right, pending at 230. If you can get filled for 235 or 240, great. I got filled at 238. That's going to pend at 230. A couple more counts here, and I'll post this for Project Options Edge. All right, so 230 is getting filled. All right, new trade coming in. This would be Project Options Edge. New trade. Trade 125. This is GLD. We're going out to December. Buying the wait. What? Hang on a second. Oh shit. Did I just make this like a weird ratio spread plus a debit spread? Oh man. Well, that's not what I wanted. God damn it. Hang on a second. All right. So that 475, 485 call spread, I'm in that, I guess. And then I was trying to do the 285, 270. Yeah, that's the trade that I wanted. All right. Well, it's a way better fill then, huh? All right. 285 by 270 is actually offering over like $5.90 a credit. I like that income trade better. I'll still take the trade as is. That's an interesting trade. It's because it was sitting there with somebody. Somebody asked me to price out the the out of the money call spread. Just kidding. I mean, it's on me. I took the trade. But the trade I really wanted was the 285 270 ratio spread. That's what I want. So as long as price stays above 285, I'm going to make $230. Even if I lose on the call spread, by the way, I'll still make $230. So what I'm going to do is add the official ratio spread that I wanted. This is the trade I'll post for engineered options. It's a 285 by 270. Let me see if I can go a little bit bigger. I can get a 20 wide profit trap and still get $5 on the trade. I like this trade a lot. So I got a $2,000 profit trap, and that would put my price down to 265 minus 20 minus 5. I'd own GLD at 240. Even better. I'm going to take this trade. All right, so let's see when we get, dadgummit, 462. Let's try it for 510. I'll figure out where this is. That one's not too bad. 280 by 260. Give me, let's try 420 in this trade. All right, let's try this again. So just the ratio spread, 280 by 260. Try to get 415. 410. Come on, GLD. Give me $400. You got to be kidding me. So 280. All right, 280 by 265 for 5 and change. This one should fill. Do the break-even math. 265 minus 15 minus $5. 245 break-even. I'll take it. Now to see if I can get the fill. Let's try 525. Well, that was easy. All right, 525. I like this trade better. This is the ratio spread that I wanted. It's obviously, better credit than the 238. So this is the trade I want to post for the service. 525 fill. Now let's go to these portfolio margin accounts, get filled for 525. It's feeling really easy, actually. I'm going to try a slightly higher premium. See if I get 535 out of this. Nope. Let's try 530 out of this. Nope. All right. Just take the 525 and shut up. No, it's not filling a 525. 520. Jeez. Come on, brokers. All right, let this marinate here. If I can find a sweet spot at 510, or as long as I'm pulling over $5, 510 filled, okay. As long as I get $5, I'll take it. All right, another trade here. 510 is filling, no problem. Okay, I'll leave it at 510. All right, pending order. All right, this is going in. So we're going buy at 280. 280 put. And sell the 265 for $5.10 to $5.25 credit. I'm filled on multiple accounts. So ratio spread. I'm willing to own GLD if price is less than 265 by expiration, which right now that is going to put us around a 92% chance of profit. We got about a 90% chance of profit with the ratio spread and the break even at 245. That's about a 4%. About a 6%. About a 6% chance of assignment. If assigned, break-even price is, take the 265 minus 15 minus 510. I own it at 244.90. If you don't want the shares, manage the naked put portion, which right now shows. Let me go to just one account and figure out where I got filled. So that naked put on GLD out to this one is 280 by 265. So I bought the 280, sold the 265. Okay. And that filled for $7.49. Filled for $7.49 credit. So consider $7.49. So about a $22.47 or $29.96 debit for manage stop. Okay. So if that is the case, I mean, that's a huge volatility increase in gold. You can also close out your naked put side and contain the risk and then have a free hedge at the 280 long put. And if price drops. All right, trades in. At what point in time would you cancel the broke wing butterfly trades? Well, they're not canceled, Keith. I'm in them. Right? I'm in the trades. So those trades from earlier this morning are filled. 20-cent credit, 10-cent credit. I'm not canceling them. I'm just going to ride them and try to manage them into the rest of the day. So they're sitting at a pretty good spot. Where is my? I think I called it DPP broke wing butterfly. There we go. So these are the two trades from this morning. Again, showing like a tiny little profit. This is only going to be worth about $30 of profit today, but I have a $15 profit trap on each one. So if price does fall to fresh lows, falls to like 65.50, falls to 65.40, falls down to even 6,500, then the profit trap gets really exciting. So just going to hang out and let this sit for the day. All right. And then for the rest of the day, I've got bear call spreads still pending. They never offered more than like 40 cents today, so those are still pending. I've got a bull put spread at 64.80 by 64.70. I'm trying to pull $1 out of that one. That's again like a pretty high probability trade. It just depends on if we get the credits to fill it. It's only trading for 10 cents. So I'm using my expected move box to stay out of the way. So I'm looking at selling puts down here, selling calls up here. Price is still just kind of chopping around in the middle. And so far, we just have a pretty efficient day, considering yesterday just leaked a little bit lower. Okay. Bashy, I'm good, man. All right. Mine didn't fill. Since mine didn't fill, do I wait? Yeah, I mean, hang out with them. I mean, only asking for like 20 cents or 10 cents. If the market falls back down to lows today, they might still offer a small credit. They might offer small credit. So I'd still take that trade. What I will probably end up doing is if I see, if the same trade that I took earlier, I got filled for 10 cents and 20 cents. Okay. Which is not exciting. Like I'm not stoked about making $30. I'm more excited about if price is going to fall to fresh lows today, I have a $15 profit trap times 2 that offers maybe a $3,000 winner today if price is going to fall around 64.90, 64.80, I've got profit traps sitting right there. Now that won't really happen until like 3:30 p.m., 3:45 p.m. today. But if price is here, nothing happens. Okay. But if we come back down to maybe revisit lows for the day, maybe even go a little bit lower, I might take another broken wing trade and maybe get 50 cents and keep the same strikes with a $15 wide. I'll just keep an eye on this stuff for the day. Okay. So the day isn't done. I mean, the zero DT stuff, I'm pretty active all day and I'm just kind of watching our levels. All right. Closing bell. I mean, maybe. Let me see if I've got another session lined up. I think I've got time. I'll probably come back at closing bell for 30 to 45 minutes today. I don't have any scheduled webinars or anything. So yeah, I think I can come back on and do a live session with everybody. So come back and join me. I'll probably be live at like 3:15 or 3:30 p.m. for the final little bit of the day, and we'll hang out together. Cool. All right. For today, Deanna, sorry, we've been just kicking this all morning, but will you fire up a little newsbreakers action? Everyone's still sticking around today. We got little newsbreakers. We'll have I just did a core strategy video, by the way. If you're in my double up service, I had some new members join me this week. Please check out your double up alerts classroom. There should be a core strategy video. And what's funny is I did the video yesterday. I took a trade yesterday during the video, and that ended up giving us about 100. I took a 95% winner. And if I updated like, 20, 30 minutes later, you should have had a better closing price than I did for anywhere between like 150 and 125% gain on your trade. So it was an XSP trade yesterday I took for 55 cents, closed it out for just over $1. And I think it was offering up like $1.20, $1.25 later in the day. So if you were able to get a better fill than I did, let's say you close it for $1.25, you had 127% return on risk yesterday. So during that video, I walk you through exactly what I do in double up alerts. I check the SPX, the XSP, the SPY, the Qs, the Dow, the Russell, all the top 10 stocks, try to find some levels, build out my core strategy trade. It was perfect yesterday. It worked out great. Had a nice little winner. I was just under the 100%. But if traders were following along with me, they had a chance to grab, right alongside me, 95% return on risk or up over 100%. So pretty cool trade. Low risk, high reward. That's all I focus on for double ups. So anyway, check it out if you're a double up member. It's inside the classroom. It's a core strategy video. You can't miss it. Cool. All right, Gianna, let's fire up a little news breakers, and we'll see everybody this afternoon. Thanks.